This lesson is pretty much the final lesson in our little series here, and this is called a case study of the whole system. And on the book that this is taken from, this picture of the price chart is what we have here. And on the cover, there is this little red circle part here. It says quick, easy, fast, and real. And believe me when I say, this is the truth. There are people that have spent their lives, and I'm one of them. I didn't even begin to learn this stuff until after I had retired. That was in my 60s. And even then, it was a slow process. With these few videos that we have produced, you are going to be absolutely light years ahead in your self-education, your learning process. And you are going to be absolutely ready to go out, and I'm not going to recommend you kill anybody, but you can have some pretty strong words for people that know this stuff but don't tell anybody. This is my own personal philosophy here now that I'm going to say. I've asked myself, why do we have an educational system that takes people all the way through 12 years of public education for high school diploma, then on to junior college, then on to a bachelor's degree, and this stuff is never taught. I have a bachelor's degree, accounting, business information systems, and liberal arts, 3 degrees. I never learned this stuff anywhere. And one of the key mantras that I kept getting beat over the head with was, when you get a job. And basically what they're doing is programming you to become a robot. And then you go through all the steps of, are you a good robot? Or are you a little bit eccentric or verbal or emotional or whatever? You decide for yourself where you fit into all that spectrum of reality. All I know is that with this, the steps that you have been exposed to will give you an outstanding income for the rest of your life. Now, we start this process, and this is an overview now that we're doing here. We start this process with an idea, a mental head trip. And we go searching for some information. ETFs. We open up each individual ETF that we have a awareness of, and we look for the best company in that exchange-traded fund, ETF. That's one way of finding these little nuggets. Another one is to go to a blog, financial service. Yahoo Financial, which is the one I use, they have a daily thing that they put out, publishing service, if you want to call it. Another one, MSNBC, and they have some people. Kramer's one of them. He is an old-time professional trader, and he loves to be very theatrical. Most of Kramer's stuff, though, is historical. It's past, old information. However, he does throw out some philosophical stuff every once in a while. We are kind of looking for now and into the future. And the past can be used in reference use only, but it's not to be chiseled in granite and that's our baby. We're going to follow the historical stuff only. You can lose money real quick doing that. But there's some people, they do that. For the buy and hold crowd, historical has a lot of input into their thinking. However, we go for ideas, we look for future growth, future hopes, and using our little chart here, we come along and we see that we have an uptick right here. And then it peters out. We have another uptick. And then it goes sideways. Now these little attempts to generate some action are kind of interesting, but nothing happens. We don't see any real action until we get here. And you are going to, if you see these little blips and you get all excited, ooh yeah, you jump into them and then nothing happens. Remember, there's 5 things that can happen in a price chart. A big loss, a little bit of a loss, nothing happened, a little bit of a gain, and a huge gain. Now, with our protection, our stop orders, you can go down 5%, 6%, whatever level you want. There are formulas, you can find those if you go looking for them. I just generally go for 5%. That's how much I'm willing to lose, and then I say I'm out of it. But the middle one, zero profit, that's a no-brainer there. But a little loss and a little gain, these little loss, little gains, little loss, little gain, they offset each other pretty much. They stay within that range of where your protective stops are, and so they will hopefully cancel each other out. With no big losses, that only leaves your big gains. And over a period of time, with you doing your due diligence and being astute at what you're doing, and you'll get more experience at this over time, you end up having some really nice nuggets in your portfolio and in your history. And you just keep doing this. And I've recommended already that you only have about maybe a half dozen or 5 deals in action at any time so that you don't get lost in the weeds. Anyway, you've done your due diligence. You have looked for ideas. You have listened to people. And a really big one too is your stock screeners. You can go at any point and they will give you a picture that will show, here's one with a rise today. In those stock screeners, you get to put in all kinds of parameters. You know, you only want small cap, you want stuff with a maximum price of $20 a share. Blah, 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 whatever your choices are on those screening parameters. One of the things you will find once you get into it is the big winners today. And it's this kind of a thing. If you wanted to do nothing but invest in the winners, you could do yourself real good. There was a gentleman, John Templeton, this was way back in, I don't know, 1930s or something, and he, I think, put $10 maximum. He bought 1 share under $10 of all the winners. And he wanted to see what would happen in a year's time. He ended up making a bundle. There was some that went up, some that went down, da-da-da-da-da. But the overall effect, you can go on Investopedia and look up the history of John Templeton, or find yourself a book in the library. I mean, 250, 350 page book, and you'll be amazed when you get really along into stuff and you begin to understand what's going on. George Soros, he knew that this was after World War II, the base currency for the whole world was the US dollar. Prior to World War II, it had been the British pound. And so George Soros had an idea that if we're going to be changing over to American currency as the world's standard, that means the British pound, with their mentality of feeling that they were entitled or whatever, and they weren't anymore, they were going to go down. They couldn't go up because America had the base currency standard then. So George Soros, he started shorting the British pound. And every time that it went down a little bit, he would make a profit. And it kept going down and down and down. You can look up the British pound history. You can look up George Soros' history. I have no idea how long this went, whether it was months, whether it was a year and a half, or what. All I know was that George Soros took Britain 100% to the cleaners. He virtually bankrupted the country. They had massive financial problems in that country. They had to go to a full-on cash tax system. Money would come in, money would go out, but they could not go into negative financing, which is what America has done. So George Soros made a fortune, literally billions, 100% with a B. And he is still living off of what he started then. He perfected his, what do you want to call it, procedures, and started his own financial firm, and he's still a player in the currency markets and in what's going on. Right now, getting back to reality and this, we come to the stock screeners. If you want to just look at the charts only, that's fine. I would seriously caution you, though, if you go with the technical information first, go back and look at the fundamental real quick, because you do not want to get yourself some pig that's got lipstick on it. You want something that's quality. If you find the fundamental analysis says no, drop it. Fundamental analysis will tell you what is good. Technical analysis will tell you when to get in, when to get out. Now, getting in and getting out. Getting in, that's kind of important, but not massively. And when I say that, with our simple moving average thought, the 10 and 30, we will be coming along with our little reference lines, and they will be going up and down and, playing along. At some point, the price chart will start up. Lagging behind that will be our simple moving average lines, and they will cross the price chart right here and right here. But they won't cross each other until a little bit after the price chart. So you want to have everything prior to this on what's called a watch list. You will put all kinds of information on just a plain old piece of back of an envelope or some scrap paper. That's going to be your initial screening, shall we say, that you do. You are looking for companies that, for whatever reason, are in front of your eyeballs. Once you have those names and ticker symbols, whatever, you can then go to the next phase is going to be your fundamental analysis. Is this company a good company? And it's going to be an elimination process there. And you will drop off a whole bunch. Then you'll look at the technical information. And if we're looking at the big picture now, the 5-year time span sort of button on your chart. And if it shows sideways motion, then we're not going to get very excited. You have done an elimination, then you have done a selection. It's a two-part process to get into a deal. Eliminate the dogs, select the really good ones, and then you sit and you wait and you watch. If stuff is on your list for 2 weeks, a month, throw it away. It basically is in a never-ending sideways movement. And there are, well, I'll use municipals, power companies, sewer companies, school districts. They're like that. They will never go up, never go down. Their game is that they give out dividends or interest on their bonds. And that might not sound like very lucrative, sort of very boring thing. However, when you've got big bucks invested and you get 5% back every 6 months, every 3 months, whatever their schedule for their payments are, oh, it can, float your boat so good. So, the sideways movement, be aware of what you're looking at. Because we are swing traders, we're looking for this kind of action. And after we get past this initial dip here, it goes then, once these simple moving average lines cross, that's our signal that what we have is now a legitimate deal. We don't have a clue how long this is going to go up. We had one that went up a little bit here, one that went up a little bit here. Nothing happened. However, we come over here and all of a sudden we get this signal. The next thing we look at is this real close to the price chart? This one, they're quite far apart. They're very distinct from the price chart. And that is really what we're looking for, because that tells us we got solid gold here. So somewhere after these simple moving average lines cross, we will pull the trigger, we will get into a deal. And again, you got your nest egg, you only put in a certain percentage of your nest egg. You do not put all of your nest egg in. You want to preserve yourself in case a catastrophe happens, a flash crash. Specifically, that happened when the Twin Towers went down, 9/11. Or, another example is the Brexit vote. On both of those, professional investors all of a sudden had this event happen. The day before the Brexit vote, everybody knew it was coming up, but nobody knew exactly what the excitement level was going to be. And when you get terribly, terribly exciting times, all of a sudden the professionals, they simply checked out. They converted everything to cash and they went and sat on the sidelines. They did not participate because Well, 9/11, for instance, airline industries, they shut down for, I think it was 4 days or a week or something. And everybody was, what's going to happen? We don't know. Well, the financial people are basically very risk averse. They don't want to take risk. And so they got out of the market. Now, there are some crazies that they just love risk. These are the people that will get into the silly hour first thing in the morning or the silly hour at the last thing of a business day. Don't go there. Be very safe, at least for the first period of time in your investing life, first year, whatever. Anyway, we come along here, and the price chart and one of these lines are going to pretty much go hand in hand. And the one that's the closest here is the 10-period line. The one that's furthest away is a little more longer range sort of view. And we just want to watch until everything comes together. It goes up, it comes down, you know, it tries to hit a high point here, falls down a little bit. It comes up just barely again, falls down again, and finally for the third time, it makes a top. And then it really falls. This kind of try, and then just bleh. That's a very common pattern. Sometimes it's 2 tries, sometimes 3 tries, sometimes only gets once. But we come along here, and officially, when it gets to this point here on the downside, all 3 of these lines are coming together. And that's the point where you want to sell out. If you want to hold on, you've heard some rumors that it's going up again and you're not so safe, you're a little more risk tolerant, you might want to ride this last little bit of a rise here, a few pennies, shall we say, from the point here to here. This chart is basically bouncing around and going sideways. The real action, shall we say, was all the way up to here. And anything after this point right here is just stuff that's happening. So when you see all of this stuff coming and you get to here, all 3 lines are crossing each other someplace or another. This is the point where you want to sell off. Now, the important thing is that since this is our simple moving average lines are historical information, they are lagging information. You will not ever hit the high point. However, when you do finally sell at this point, from where you started here to where you get out here, you've made a bundle. Even though you don't hit the highest possible, you don't care. You're still laughing all the way to the bank. This is our basic chart, shall we say. And by watching where these lines cross, this is your entry point, this is your exit point. The technical information will, underline will, put it in red, put it in capital letters. Technical information will tell you when to enter and when to exit a transaction. If you think, oh, my emotions tell me this is going to go to the moon. We're going to set the desert on fire. It's going to be great. You're in for getting yourself an avalanche of trouble, and you're going to get drowned deep under that avalanche underwater. Do not ever let your emotions run your thinking. You have to be 100% stone cold, hard, logical about this. If you're not logical, stone cold, brutal to yourself, to your money, you might as well not even start. There are people in this world, and I'm not going to name any names, that would not be proper, but there are some people, they think with their heart, not with their head. And usually, not always, but usually, the people that are thinking with their heart do not do very well. Sometimes they're blessed, but most of the time they're all over the map and they fry themselves so many times simply because they're going where their emotions lead them. Okay, this is the summary of our basic system. This is the first level. And if you will recall, back early on, the first or second lesson, we had our example of Lewis and Clark expedition. Ground level, an airplane, and something in space. Space shuttle or whatever, satellite. When you do this action, you're down at the ground level. You're in the swamps, and you are struggling, and you are marching through the steps in the system. The next level up from that, however, is what do you do with all of this success? Do you just go to the bar? Do you go sit on the beach in Hawaii or South America or Australia or Caribbean someplace? Do you blow what you have made? I would suggest you may want to consider the next level up from ground level. To do that, all you have to do is think. Think and Grow Rich, remember the book? A little bit of planning can go a long, long way. And there are Boys Town, church mission projects, businesses, all sorts of endeavors that are worthwhile. And you will get a lot of satisfaction from being involved in these endeavors. There is a gentleman in Africa, his name is Charles Mully, M-U-L-L-Y. He's on the internet. And the last hard number that I was aware of was over 25,000 kids. This guy has gone out, picked up literally off the ground, rescued, brought into his little place. Well, it's not so little anymore. And he has provided shelter, food, education, and, how should I say this, spiritual enlightenment. The reason he is so motivated to go out and rescue these kids, this is in a third world country, is that he was abandoned when he was about 12 years old, I think it was. And he struggled hard. And I don't know how much education he has, but I do know that he was very, very blessed and very successful. He had a community bus service, one of his centers of profit. Another one was selling fuel oil, gasoline, and so forth. That was one of the areas that God blessed him with. And finally one day he was just very upset with the futility of his life. Successful, a lot of action. People were employed, but himself, he was not going very far, very fast. He was just doing the same thing, various ways over and over and over again. And he decided that he was going to, because of his own history, start doing a children's rescue project. Today, there are doctors, there are lawyers, there are accountants, all kinds of people that are super successful. He even rescued his own mother and father, caught up with them after the fact, years later, and in this environment that he's in, firewood is a commodity that everybody needs, uses, and they cook with it, and so forth. And so he set his father up with a firewood business. Very simple little sort of thing. Taught his father how to be successful. And his father and mother, they're 80s, 90s, something like that now. I don't even know if his parents are still alive, really. But I do know that they were, by their standards, doing okay. He ended up blessing his own father and mother. The point I'm trying to make is that you will make it. It will be, and I repeat, quick, easy, fast, and real. And it will be. I truly believe that. It's like, you see money wadded up and on the ground. And all you have to do is to get it. I'm sure everybody has done this at one point or another in their life. They simply bend over and pick it up. That's what we're doing. We have the tools and the information, the ideas, the concepts now to be able to take this money that's just there and take advantage of it. Anyway, second level is figure out what you're going to do, who you're going to benefit. And I'm not talking about giving the black sheep in your family a fifth of booze. I'm talking about something that's going to be long-term benefit. You help somebody up, and they will then be able to help somebody else up. This whole series, this book sells for under $15. If you're going to give that book as a stocking stuffer, as birthday presents, Christmas presents, do you think the recipients would benefit? Well, my crazy son, he just said, "Thanks, Dad," and set it aside. So, didn't help him very much, I don't think, yet. I'm still hoping that he will read it. But for those that do receive and will read and will benefit, can you imagine? The whole thing is going to open up. I mean, it's going to be a beautiful, wonderful, sunny life that they're going to have. Okay, now we step up to the very highest level. And that is when you stand at the pearly gates, are you going to be told, "Well done"? Or are you going to be told, "Get away from me"? This is what it's all about. The long-term, massive view where God is going to end up having his thoughts apply on your life. So, I really do hope that, my closing remarks here now, you have listened to this, first time maybe, but go back, look at it again. I know that this whole video series, I think there's 6 lessons, something like that. I could be wrong on that even. It's a few hours. And if you look at them all a few times, you're going to have this stuff nailed so hard. And it's going to be second nature to you. When I started, I had nobody to give me any ideas, nobody to hold my hand, nobody to give me an overview of anything. And I spent years, and I spent thousands and thousands of dollars, well over 10 grand, on accumulating what I have just told you. And for you that are on the internet watching this on YouTube, it's free. You can download it, put it in your computer, suck it up that way. More power to you. My blessings. I really, really hope that the stocks, which we're talking about here, swing trading, protective stops to keep yourself safe, I hope it's all good for you. I really do. Usually, people will go into options, the next level up. Again, don't pay for it. There are people out there, oh yeah, come on in, we'll charge you $1,600 and we'll tell you how to set the world on fire. You can get it all for free if you just ask. After options will come foreign exchange. Usually. Not always. The general rule of thumbs, and this is a real general rule, so don't quote me on this one, but for the stock market, you put $1 in, let time happen, you're going to get $1 profit out. $1 in, $2 out. On this example, we didn't even make a full dollar. In the back of this book, I did a spreadsheet at the very end here, and it was in quarters. And we start off the first quarter and we go through. By the 22nd quarter, we have made approximately $1.49 million. My example up here, this is all spreadsheet, 100% what if. This is hard reality. This spreadsheet is monopoly money. And I explain that. I'm not trying to snow anybody. If you take $1 million out, it'll drop you back 4 quarters and you start going again using this system. If you could get $1 million before taxes every year, would you call yourself successful? This is how powerful this can be. And anyway, getting back to what I was saying. Stock market, $1 in, $2 out, you made $1 profit. With options, $1 in, you will get back $10 profit. With foreign exchange, $1 in, you will get back $100. The leverage, that's what we're talking about here, is infinitely a magnitude higher each time you go. With options, it was originally designed as a way to protect or to have insurance against bad stuff. And you can use that not as insurance, but as a vehicle to do what you want to. And again, I stress this. Know what you're doing. Have a game plan. Don't be a dummy that starts in from scratch. When you get to foreign exchange, that whole market was designed for consolidation of accounts for businesses. Well, if you want to ride the foreign exchange market as an individual, you're not a business, you're not settling your accounts, but you can sure make a ton of money if you know what you're doing. If you're going to explore these If you're going to explore these areas, do it with very small amounts, $20, $50, because until you find out what's what, it ain't going to be good for you. Now, my last thing that I want to tell you about is the first and worst deal that I ever did in my life. I was working swing shift at a school. And the guy that I was working with had a little radio that we had plugged in, and it was just, you know, blathering away. And it was set to a financial AM station. And this guy, oh, he was just talking about futures markets, yeah. And it sounded so good. And he gave down a phone number. And so I very quick whipped out my little Sharpie and I wrote on the bottom side of this table that phone number. I'm sure if anybody came along, they were going to find all this numbers and phone number, whatever, and they'd wonder what in the world happened here. Anyway, after I got the number written down, I eventually went back and got that number, and I called him a couple days later, and it was a financial guy in Florida. Well, I was in California, the other end of the country. And I told him straight up, this is my first financial transaction I've ever done in my life. I heard your radio thing. It sounded really good. What are you selling? What are you doing? And he says, well, we're doing futures. And I says, I don't know anything about that market. And he says, oh, you'll make a fortune. So I said, okay, who do I send my money to? And he says, well, you send us your funds and we'll send you an agreement. You sign that, put in your tax ID information, and we'll all be on the up and up and we'll be good. So I did. I invested $2,000. I figured that was a nice round sum for first time beginner. I didn't want to sound like a, you know, idiot, which I kind of was. So he got it. Oh, he was happy. And he wrote me back and he says, yeah, we got you invested into, and he gave me, I don't know, it was the information. And basically it was the equivalent of a ticker number. But it was for futures. I had no clue what that meant. I hadn't seen any charts. I hadn't seen any logic. I didn't have any plan. I was such a green pea. And I had in my head that all financial markets were like stocks. You bought in, you owned this position, and it was going to go up, down, whatever, but eventually you could get out, at least not lose money. That was what my mindset was. So everything went along for 3 or 4 months. The broker, he'd call me up every once in a while. Oh yeah, things are looking good. You're in a profitable position right now, and it's still headed up. Finally, I got a call one day, and he says, hey, it's time to sell. And my action was, no, we don't sell. We sit. It's going to get better. And he says, dude, I'm telling you, sell. No. I have to sit here. I have to make more. It ain't going to happen, bud, he said. Oh, yes, I'm going to wait. And I was hard. I wanted to wait. So he says, okay, but I recommend. The guy did his job. He was 100% straight up with me. I do not fault him at all. I was the issue. I was dumb, beyond belief. You talk about dumber than dirt, that was me. Eventually, he started calling me every day or every 4 hours. It's going down, Jack. You'd better sell. No. We're going to sit. So eventually, he says, look, dude, you now have a position at it's under $1,200, but get you out at $1,200 because I feel sorry for you. You're going to lose $800 on your investment. And I'm going, but I want to wait forever. And he says, look, something you don't understand, maybe I was at fault, but you don't own anything. What you have is a contract for X amount of time on some gasoline. And I go, what? Sell! So he did sell my position. Whoever got it, oh, they made a fortune. And I ended up with a $1,200 check. I was really upset. I remember I went and I got some chili rellenos to celebrate that I at least had a $1,200 check. And I love chili rellenos. I remember though I walked out of the little greasy spoon place, got to my vehicle, and I'm sitting there holding one hand on the car top, the other hand on the door, and I'm looking away from the car, and all of a sudden I go, bleh, and I ended up losing my lunch. Literally. And it was not good. And I went and I didn't touch anything financial for years after that. I had been burned hard. And I severely suggest that you do your homework. This is a great, I think, hope, a great foundation. Idiot's Guide to Securities, Stocks for Dummies, 2 excellent books that are written for beginners. And you're going to go along, you're going to find ideas and whatever. You're going to find all kinds of books like this. But I truly do hope you do not go through what I did. So, my blessings to you. Maybe someday, somewhere, we'll meet. For all I know, maybe it'll be after we get to the pearly gates, but thank you very much.